Greetings, members one and all of the Salivation Nation. Well, we're seeing gold and silver go up a bit after the Fed's interest rate cut and a dollar weakening. And this is very interesting coming us from CNBC. But could there be potentially another dip in gold around the corner? Something to think about. We'll explore that here in just a moment. Yes, gold prices climbed on Thursday as the U.S. dollar weakened after the Federal Reserve cut interest rates for the third time this year. So that's almost a whole point this year that has been cut from interest rates. But it did signal that monetary easing cycle would be paused, as we mentioned in yesterday's video. Hopes that the United States and China will sign a preliminary agreement and call a truce to their 16-month trade war was also a factor behind the Fed's decision to signal that further rate cuts are on hold. But notice that there's still some fears with that going on. Fear is a word that we should consider on this particular day because it is, after all, Halloween. Spot gold was up 0.77% at 1506.2. That's not where it is now. We'll look at that in just a moment here. We took this step to help keep the economy strong in the face of global developments and to provide some insurance against ongoing risks, says Fed Chair Jerome Powell. Of course, you can parse those words, each one of them, and make meanings out of every single one of them. But basically, he's admitting, that there is some global developments and some things around the world that are concerning, for sure, economically, as well as geopolitically. Powell ticked off an extensive list of reasons why he feels the economy is doing well and likely to continue to do so under the current stance of monetary policy. From robust consumer spending, strengthening home sales, and asset prices he considered healthy, but not to a level of excess. Gold might not hold its current upside in the short term, as it is likely to suffer a little as some recent economic data showed modest growth in the economy. And so that is a little hint or clue is what we're going to be reading in a moment here from Centuria Sylvia that's sent to me. This was by Michael McCarthy, who's a chief market strategist at CMC Markets, attributing the present rise in gold prices to a weaker dollar after the Fed's rate cut. The dollar index against a basket of 6 major currencies dipped to 0.3% to 97.36, making gold cheaper for holders of other currencies. A rise in inflation might be the next catalyst for gold buying in the short run, as the Fed is more likely to tighten with a higher inflation rate, making some investors hedge against it. That's inflation, and that's what gold is for. Gold is really simply a hedge against inflation. It's a beautiful metal, but that's what it serves to do in these particular cases, to hedge against economic instability. One of those biggest concerns are inflation. Asian shares cheered the rate cut, and U.S. stock futures edged higher, with MSCI's broadest index of Asia-Pacific shares outside Japan gaining 0.2%. While buoyed by a weaker dollar, if equities continue to outperform, it's challenging to see gold move above the $1,510 critical primary resistance level. You also heard me talk in the last few days where analysts say the critical resistance level was $1,525. So I guess it just varies. It just depends on how these technical analysts, how they pick these numbers. I don't know. I don't get into it that deep. Among other metals, palladium gained slightly. It's at a record highs. We'll look at those in just a moment here. In fact, we're going to take a look at where the prices are right now. Before we do that, I just want to remind you, folks, that I do post videos daily, every day. So if by some chance, and there's more chances than not, many of you won't get a notification of this or other videos, but just come back to the Salivate Metal channel page every day, and more than likely, you will see a new video there. Also live stream on Tuesdays, Fridays, and Sundays, all at 6 p.m. Eastern Time. So here we are, the markets where they stand right now. Is refresh the page here. We see that gold is up in the clear. Actually, it's not the winner of the day, but it is up a lot. A 1.14% increase, $17 increase in gold is now comfortably above that $1,500 level and comfortably above that resistance level of $1,510. The next level maybe would be that $1,525. We shall see. You know, it's one of these things. Do you buy now? Is it going to continue to go up? Will it go back down? We'll look at that side of it here in just a moment here with a gold price forecast. Silver is the winner of the day, though, with a 1.37% increase, a 25-cent gain on the day, $18.18. So silver is now uncomfortably above that $18 level because it's been bouncing back and forth. Silver, the reason why it's uncomfortable, and it's and where I'm negligent, I am kind of resistant to make calls with silver, other than to say that I do think it's comfortably above $17, and I think we won't see it go below that level for quite a while. I do believe it has the upward trajectory movement, though, because it is a more volatile metal, and it is seen as a commodity just as much, maybe in some cases more so, than as a hedge at this point. And I think these price movements are acting as such. Platinum is up $7 at $935 an ounce. And palladium is staying above that $1,800 level, still record highs, but it is down 0.61% or down $11. So it's interesting to see these markets move. Will they continue upward, or is there a potential for one more decline? Again, this is coming to us from Gold Eagle News, an article sent to me by Centuria Sylvia, who definitely has become more of a gold bug, and I kind of have as well. But I do also buy silver from time to time, and I think the silver has more upward trajectory movement. But this, after peaking in September, gold entered a mild corrective phase. The pullback in October lacked depth and appears incomplete. Now, this is important. They're saying there's a potential for secondary breakdown remains. A pause in the Fed rate cutting cycle on Wednesday could trigger the next wave of selling. So be on the lookout for that. Gold prices tend to form intermediate cycle lows about every 6 months. Each 6-month cycle is usually comprised of 2 or 3 lesser cycles, blue arrows lasting on lesser cycle average. So then we're getting into somewhat of a technical analysis here, but I have a thought on this as well. It's about 55 trading days. To register an intermediate decline, prices need to break the prior low. In this case, gold needs to drop below $14.65 before we can expect a genuine 6-month bottom. So here we can see these blue arrows, and we can see that we're not oversold at this point yet. And then we see these other cycles here. Moreover, the SLO stochastics top indicator in the chart above should be at least reach mildly oversold level to promote a 6-month low, and needs to fall below 50 in October. The commitment on trade update has us as typically we see that 50% reduction or better in commercial shorts before gold carves out a sustainable bottom. Today we've seen just 15% reduction from the September break to establish the next low. The author would like to see a commercial shorts below 170,000, currently at 295,357. So the summary is that the decline into the October 1465 low lacked readings consistent with a bottom, and we just saw a 50% reduction in commercial shorts. The chart looks bullish, but cycles and commitment of trade support another decline. So that's interesting. That we'll see, and that's technical analysis there. But you know, some of these things they're kind of in their siloed in their analysis here based off of the past performance. But the thing is, it's very difficult to really rely on this, in my view, because we don't know what lies around the corner in terms of the psychology and the geopolitics and other factors that really weigh in, I think, more importantly on some of these price movements than some of these what's happening on the technical side. But it's not to say that it can't happen. I believe this could happen if we see things kind of stabilize, but we have other things that are happening in the world. You know, China has not been signed. I think if we do have a deal signed with China in the next week, then this very well could happen, barring any developments in Brexit, which doesn't look like there's going to be anything in that regards till December. And politics-wise, domestic politics, we have another vote on an impeachment, and for the rules for an impeachment inquiry from here on out to become public. I don't think we're going to see a whole lot breaking in that regards until we see two other reports come out, and the Horowitz IG report and the Durham report that's coming under the Justice Department. Now, longer term, the author here does believe that gold is in a new bull market and prices are heading much higher. And so we'll see. We'll see how this thing plays out. It'll be interesting to see. So we could see this dip coming here, which means that it may be a good time to pause in order to buy gold. And so I'm at a point where I'm not sure what to do yet here. I'd like to think that this is going to happen. I hope it does, because I'm a buyer of gold. And that's kind of what I'm trying to do. Been trying to do for actually a couple of years, trying to get a little bit more gold. And but nonetheless, we'll see. Thanks again to Centuria Sylvia for sending me this article, and it is interesting. But so far, the metals are up. We'll see where we go from here. So there you go. I hope you enjoyed this video. Would like to extend a multitude of gratitude to all of you for taking the time to watch this video, and encourage you to please rate, share, comment. And by the way, I read every single comment, and when I do read them, the very least I will do is acknowledge, even if I disagree with you, with a little heart, that I've read it, and I will usually respond to it one way or another. I want to extend a multitude of gratitude, y'all, for watching. Please rate, comment, and subscribe. Hello? Hello? Got a scammer calling from an auto dial. I think it's going to hang up on me, though. You're going to hear it, though. Hang up. Hello? Let's pause.
Hi, may I speak with Richard?
Yes, this is Richard. Hello.
Hi, this is Faith from My Capital Funding. I understand you're looking to acquire some working capital for your business. Are you still looking?
I am still looking for some working capital. Yes, indeed.
Okay, how much capital are you looking for?
Well, it all depends on what gold does in the next few days. Will it go down? Will it go up? The technical analysis says it might go down. So if it does, and I want to buy some, so I'd like to get about $120,000 to buy some gold for the business. It's for upgrades for the business. We're going to coat the toilets with them because I care about my employees. Gold-coated toilets. What do you think?
All right, have a good day, okay?
No. I want a loan. I need a loan. Help me. Where's my loan? Dang it.